Yes, dear our listeners, we are back again talking about tax in Uganda. And specifically today, we are trying to answer questions that are around taxpayers who are registered for value-added tax. Now, last week, one of our clients came. He had input tax of around 50 million. So he expected, after looking at the output, which was around 80 million, he expected to pay a difference of 30. But when the return was being filed, actually realized that the tax to pay was not the 30, but was 40 plus. And the client came here quarreling. He was not happy at all with URA. But now when we went into his business, we realized that this client actually deals in both exempt surprise and standard rated surprise. So what are we talking about? We tried to explain what this is all about. There is what we call VAT input apportionment. That if you're a business that deals in both exempt surprise and standard rated surprise, or taxable surprise and exempt surprise, you don't claim the entire VAT input that you have incurred. That's what we call VAT apportionment. It's a mechanism through which URA apportions the VAT that you have incurred while you are buying whatever you are buying. Why do they do this? Because your business sells both taxable surprise and non-taxable surprise, so they will not allow you to just claim the entire input, because some of this input is actually not directly related to what you are selling. What am I saying? If, for example, you buy a software and they charge you VAT, this software, you will not sell it, but they have charged you VAT. So the taxman will not allow you to actually claim that input fully when you are actually dealing in both taxable surprise and exempt surprise. What normally happens is, if the percentage of taxable surprise is more, is 95% and above, you literally claim the entire input. But if you find that the percentage of what is exempt is what is more, above 95%, then you don't claim anything. Now, what is in between there? If, for example, what is between 5% and 95%, that's what calls for apportionment. That the taxman will not allow you, but will allow you just a portion of the VAT that you have incurred. However, the law allows us, there is what we call standard alternative method of value-added tax apportionment. That if you find that the other default method that we have talked about, what we call the general method, if it puts a taxpayer at a disadvantage, what happens is that you can actually apply to the Commissioner General to allow you use another method, in this case, the standard alternative method of apportionment. And in this, it allows you to claim all the input that is directly related to the things that you sell. Then that other input that is directly related to things that you don't sell software, administrative expenses, that input is what will be apportioned after claiming the entire input that is related to what you sell. In that way, realize that every other input related to what you sell will be claimed fully. That becomes an advantage. You only apportion what is remaining. But the default method, for it will just apportion everything, irrespective of how much is directly attributed to the sales and how much is directly attributed to those other items that you don't sell. Let me hope this is clear to everyone. But if you still feel you are still challenged like this client I talked about, come to our office at Demo Consult, and my team of experts will really advise you, will handle your tax matters, and you will be at peace. Thank you.